Well, markets are set for their second three-day pullback this year on fears that the Fed could start to taper from September. Now we're joined by Mark Newton of Grey Wolf Execution. Mark, we've known for a long time that tapering was coming. Markets have been expecting this. Why do we still see this kind of reaction?
Well, I don't think the market necessarily knew that it was coming. I think the Bernanke had basically made the market feel very comfortable at one point that he could have gone in either direction, although the market knew at some point that tapering had to happen. But the data certainly hasn't been all that encouraging in following the Fed's forecast to think that we needed to taper right away with regards to unemployment and GDP. The recent data in the last week has been much more supportive of this view, and we probably will have to ratchet up GDP by at least 1% given the data yesterday with regards to the deficit. That is pretty encouraging. The dollar, as we know, has been falling really since the latter part of May, and so that's been really helpful to exports. And so that, along with the increased energy production out of the U.S., really is helping us to avoid relying too much on foreign oil these days, which is something a lot of Americans are happy to hear. But that's certainly been conducive to seeing better deficit numbers and thinking that the economy is getting better. We'll see if that's going to be sufficient to say, okay, we start to taper. As of now, we don't really see ample evidence to think that that's going to happen right away.
Okay. Some have argued that the decision to taper could be driven as much by the fact that it's simply very expensive for the Fed to keep going with the program versus better economic health. To what extent is that?
Well, that's tough. I mean, a lot of people have made arguments as to the dangers of keeping this program going given low interest rates. They came out with some data recently that suggested the level of leveraged loans, the value has been far less, and that the junk debt that's been issued has also gone down substantially. So that is a couple reasons to think that the Fed is happy to keep this in place and doesn't really see any danger. But I think, as we all know, inflation eventually will rear its ugly head and probably could come back. And so that's at least one reason to think that if we're continuing to buy $85 billion a month and we're not seeing meaningful improvement in any of this data, that potentially we ought to reevaluate and try something different, at least start to scale it back to some extent.
Okay. Now, on one hand, we've got a weaker revenue outlook from many companies. There's mixed economic data. But on the other hand, there's the continued rotation out of bonds and back into equities. Is the latter sufficient to underpin an ongoing rise in markets?
That's difficult to say. I mean, there are times in history where everything can fall at once or rise at once. It's logical to think that with rates this low that you would definitely favor equities over bonds. Sometimes when we've seen the biggest inflows into equities, though, have marked peaks in the market, similar to what we saw in 2000. We saw giant equity inflows. So it's tough to think that although equity inflows are there, that can really drive the market. There's still a lot of hesitation, and people are on the sidelines. People are managing money are not really all that enthusiastic about buying stocks after a 20% move in the market this year, heading into a time when we've got a lot of indecision regarding not only tapering, but the Fed budget decisions and what's going to happen with regards to can a government shutdown be avoided. So I'm a little skeptical heading into a seasonally very weak time of the year as we are here in August, and the market is down. It's the second weakest month of the year seasonally. So there are a lot of reasons to be a little bit more cautious and not really as complacent here, given the run we've had.
Okay, there you have it. That was Mark Newton of Grey Wolf Execution, and I'm Jane Searle for The Deal.